today has been one of the most exciting yet boring days we have had in a very long time, with no clear market direction. Now, we heard from Fed Jerome Powell, as well as essentially the Fed Jerome Powell of Europe, which is ECB's Lagarde, and they had some interesting things to say, which we will talk about exactly what was said here in this video, as well as talk about the final Q1 numbers for GDP. Yes, it came in worse than expected. Also, we do have some major data that comes out tomorrow, which could move the markets in a big way. So we are going to dive into all of this key information and much more here in this video. Hit that like button and subscribe to the channel if you guys find value out of this video. Thank you guys for watching, and let's get straight into it. So first things first, S&P is pretty flat on the day. It's up 0.05%, but we have had some very big candles today. Look at this one candle, 1/3%, and then some of these green candles being 1/4%. Some very big up and down moves, but there was no clear market direction. And why is that? Well, because nothing really changed. Yes, we heard from ECB's Lagarde. We also heard from Fed Jerome Powell at about 9 o'clock this morning. They went on for about 90 minutes, about an hour and a half, and were asked questions about how they see inflation playing out, how they see the economy playing out, and a lot of other things, right? Not just those two things, but that's what the markets really care about. And we got no new information, no new guidance as far as policy, what they plan to do. Fed Jerome Powell basically said the same thing that we have heard this whole entire time, which the American economy is well positioned to withstand rate hikes, and that they do not expect a recession. You even had a Fed speaker today came out and said that they would do 75 basis points at the next meeting if the situation looks exactly like it does now by July 27th. And that was Fed Daly that came out and essentially said that. So that wasn't good, and that was in pre-market. It did help to send the stock market down for a bit, and that's what helped really bring us down in the beginning of trading. And then we bounced straight back up, straight down, straight up, straight back down, and now we're starting to head down in the last 20 minutes or so of trading into the close. So we didn't get any new information from Fed Jerome Powell. But this says Powell vows to prevent inflation from taking hold in the U.S. for the long run. Essentially, same thing that we have heard for months now. And this market is really categorized by data. And something interesting you are also seeing is the Russell 2000 down 1.33% today. The VIX actually down as well. The NASDAQ and the S&P down roughly about 0.1%. Dow Jones up 0.23%. I find this Russell 2000 move very interesting because this is the last week of Q2. So what hedge funds are doing is they're going out and rebalancing their portfolios, and it looks like they are still shorting the Russell 2000, which historically is the cheapest it has been on an earnings basis, on a PE basis, ever in the history of the Russell. So I find that quite interesting, and that does highlight to me, at least, there is a lot of fear still left in the markets and a lot of potential downside left in the markets, in my personal opinion. Now, if we do take a look at the data and what actually came out today, you got the final readings for Q1 GDP, and guess what they came in at? Negative 1.6%. We were expecting a negative 1.5% print like we got during the last estimate. It actually came out a little bit worse than 1.5%. The markets kind of shrugged it off when it came out. You've seen a little move down in pre-market, but nothing substantial. Why? Because it's bad. It just got a little bit worse, but we already knew it was going to be bad. Here you have it, Fed Chair Powell and President Lagarde. They both did speak. Nothing too crazy, like I said, came out of that. Nothing to drive the markets one way or the other. But tomorrow, you do have personal income month over month, personal spending month over month. And I do think that's going to be the important one, is personal spending. Are people still going out and spending money? If they are not, or not as, call it, aggressively as they were, not going out and spending a lot of money, then that is going to help tip us into a recession. At the same time, tomorrow morning, 8:30 in the morning, you have PCE price index month over month and year over year. That is the reading of inflation the Fed likes the most, and that's really what they like to pay attention to help them gauge what to do with their policies. We are expecting this to go up about 0.2% month over month. PC price index year over year expected to come in at about 6.3%. The last reading we got was 6.7%. So if we come in higher than 6.3% or 0.2% month over month, that's not going to be a good thing. And commodities did start to come down in June, but it wasn't until the end of June. And this is really for May. Don't let me get too ahead of myself. This is for May. Commodities were still high, so I do still expect a pretty bad PCE print, as well as pretty bad personal spending rates as well. So that's going to be the big thing that dictates how the markets are going to trade. But if we look at the S&P on the daily candlestick chart, we are in a downtrend. Like, this is a firm downtrend. Not like the stock affirm, but a firm downtrend. You guys can go ahead and put your little channels up here, and I mean, you're in a textbook downtrend. We didn't come up, break out past the prior highs we seen in the beginning of June around 415 on the S&P. We only came up to hit about 394 at the peak on the S&P. That was just earlier in the day today, and we are starting to come back down. So it looks like we could retest that 360 range if we do get bad inflation data, and that's what the markets are really going to sell off on or potentially rally on, is going to be that inflation data. It's going to be what the Fed says. It's going to be signs of a recession or not a recession in the form of data, and that is what is really moving the markets right here and right now. It's nothing else besides data. So when there's no data that comes out, you can expect to see a pretty docile day. But when you have Fed speakers and data that is fundamentally important to the markets, that's when the markets are going to react very positively or very negatively. But we do need a move to the downside. We do need a flush out to ultimately hit a bottom and then start to make that slow stair step back to the upside. I will say earnings start here very, very shortly, and you do have a couple companies this week like Micron, a couple other chip makers as well, and that will be important. That'll give us a gauge into consumer sentiment. But once you start to get the Apples, the Microsofts, the Googles, the Teslas, that's where we could potentially see an earnings recession. And the last thing to actually come down is expectations for company earnings. The expectations for company earnings are still at record levels. So even though there's all of this bad news, all of these bad signs about the consumer, about a recession, negative GDP, well, analysts have not lessened their earnings price target. So once that is forced to come down, once you see companies coming out that cannot meet earnings, which I believe will be in this quarter, then that's where you could potentially overshoot to the downside in a big way. Because even if you look at the margin debt, you are one bad 3 to 5% down day away from a full-on market collapse. In my personal opinion, the Nasdaq is still down almost 30% year to date. And if we take a look at the margin debt, $829 billion of margin debt as of January 2022. As of May 2022, the margin debt was sitting at about $753 billion. So the margin debt has only went down about $76 billion as of May. At the same time, the Nasdaq is down 30%. That means margin calls are very close. And if earnings come in bad and people have to really readjust their earnings expectations, that's where you could see a lot of margin calls, right? And that's where you could see us overshoot in a big way to the downside. At the same time, you are seeing some interesting things happening in crypto. Three Arrows Capital did just declare essentially bankruptcy. They're getting liquidated. This is the main headline here on CNBC. It says, quote, crypto hedge fund Three Arrows Capital plunges into liquidation as market crash takes a toll. The key points: major cryptocurrency hedge fund Three Arrows Capital has fallen into liquidation, a person with knowledge of the matter told CNBC. Teneo I think that's how you say it. Teneo restructuring has been brought on board in the last few days to deal with the liquidation process. A slump in digital currency prices, which has seen billions of dollars wiped off the market in recent weeks, has hurt Three Arrows Capital and exposed a liquidity crisis at the company. So it's unclear how deep this problem runs. If one hedge fund is having these kind of problems, it's going to feed into other hedge funds, and that's also going to feed into equity markets and get us closer to actually seeing those margin calls, get us closer to seeing that big flush out event. Like Kevin O'Leary says, he wants to see a 10% down day in the Dow. He wants to see a 3,000 point down day in the Dow to mark that bottom when some hedge fund goes bankrupt or some large business. He says it's coming. That's where you get the bottom, and I do 100% agree with that. The best bottoms in history have come, or I should say came, when people are very fearful, when you see bankruptcies, when you're just in an overall bad place, which we are right now, but you're not seeing bankruptcies, you're not seeing earnings come in bad, you're not getting a big reason to sell off stocks. Right, so I think that is coming. I think that is down the line. I think we can expect that around June 28th when we get the advanced estimates for Q2 GDP numbers. And that's potentially when you could overshoot to the downside. By then, we will have earnings out for most companies, and that is also probably not going to help us, in my personal opinion. It could be before that, just depending on earnings, how bad they are. I'm not going to be a fortune teller here. I've been surprised by last quarter's earnings from companies like Apple, Microsoft, even Google, Tesla, all had pretty much great earnings. So I've been surprised before, so I'm not going to go out on a limb here and say that's going to cause the flush out this earnings season, but I certainly don't think it's going to help, and I don't think investors are going to be all too impressed with earnings when it comes down to it, especially given all the layoffs that we have seen as of recently. Even Tesla just getting rid of, I believe it was 300 of their autopilot employees. So that is pretty much going to be all for this video. If you guys have any questions, leave your questions down below in the comment section. Like the video if you guys found value out of it. Overall though, I gotta say, you know, heading into tomorrow, heading into these big data point catalysts like personal spending, personal income month over month, in PCE, it's hard to be bullish heading into catalysts which are probably not going to be good. You're probably not going to get good numbers out of this, but if it's not as bad as markets expect, that could also be seen as a good thing. But you definitely want to watch those 3 data points that come out early in the morning tomorrow. So that is going to be all for this video. Like I said, leave your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.